Coming up on the SBS On the Money podcast, the Australian share market rises to an 11-week high. There are doubts about the direction of US interest rates, and we take a look at the investment themes for 2026. All of that and more next. Hi everyone, welcome to the SBS On the Money podcast for this Friday, the 16th of January 2026, a day where the Australian share market rose 0.5%, the S&P ASX 200 up 0.5% to 8,903. 8 of the 11 sectors ended higher. Information technology the best, stocks like NextDC up more than 3%, property and financial stocks doing well, each of the big four banks climbing, Westpac the best. The worst sectors though, materials, some of those stocks doing quite well in the past few days, giving back some of the gains they made, and energy stocks, those oil producers like Santos and Woodside down as the oil price fell, which we'll tell you about in a few moments. So for more on the day's market action, I spoke with Isaac Poole, the Chief Investment Officer at Oreana Private Wealth. Isaac, so the ASX 200 is at a 10-week high today. What's driving sentiment and where are these gains coming from?
I think we're starting to see signs that the economy is doing okay. It's still slowing, but it's pretty resilient, and inflation is looking a little tamer than it was at the back end of last year. So there's confidence there, I think, that central banks are doing a reasonable job. But we're also seeing just a broadening out of market gains beyond just tech. And that's really important. So here in Australia, we're seeing value stocks pick up. We're seeing the financials pick up. And importantly, with commodity prices going through a bit of a rally at the back end of last year, we're seeing the resources also adding to those gains, so a more broader gain across the market.
What's interesting, though, is a lot of these gains aren't just happening in Australia. The US shares there are trading at near record highs. I think there are some markets in Europe also at record highs. And we've spoken in detail over the past week still. There's all these uncertainties on an international level. More recently, the threats to the US Federal Reserve's independence, given the DOJ's investigation into Powell. We've seen safe havens like gold and silver hit records as a result of all this uncertainty, yet the greenback is weakening. What's going on there? And does the market still believe that there will be interest rate cuts in the US?
This is an area where I think consensus is really struggling to grasp. So there may be another rate cut this year in the US, but it's fairly evenly split between those who think maybe one or two is needed and those who think none are needed now. And there is the backdrop of still quite a lot of economic risk. The economy is slowing, and the question of central bank independence, particularly after Fed Chair Powell leaves in the middle of this year, is muddying that outlook even more. So I think we do have this challenge for investors to try and gather what that will mean for a range of markets, and I think the greenback's a really important one. The US dollar has actually been pretty strong against the euro and the yen. But when you look closer to home here in Australia, the Aussie dollar is doing very well. And that's because we have expectations for rate hikes. We have a higher interest rate setting. And that's really allowing the Aussie dollar to strengthen against the USD.
When you look at 2026, to what extent do you think the markets will be driven by geopolitical events? I mean, we've seen oil, for example, now down 4% overnight amid cooling tensions in Iran. And at the start of the year, all we were really talking about was the direction for the oil price with the developments in Venezuela.
This is something that's been an issue for investors over the last 3 or 4 years. Geopolitics has been such a driver of volatility across a range of assets, and particularly oil, which has been buffeted by conflicts, by geopolitics, by an oversupply and potentially slowing demand as the global economy has slowed a little bit. I think geopolitics is going to stay really for investors this year. We've got a range of new issues, we've got existing issues, we've got midterm elections this year in the US. All of it, I think, just points to ongoing volatility. Although I would stress that it doesn't necessarily mean that that geopolitical uncertainty will drive prices much higher or much lower. I think it will just be volatility.
Okay, finally, with all of that in the back of our minds, right, where do you see the opportunities for investors this year then?
Well, the last 3 years, we've seen equity prices in particular increase at rates that really are unusual relative to history. We're talking 15% or so on average. I think again this year we're likely to see equities deliver okay gains, but we are stressing that it may be something a little bit more like history. So instead of 15%, perhaps we get a high single digit or so return in equities. And that means investors do need to maintain exposure. We would just say be cautious because valuations are very stretched. So consider either building some downside resilience through higher quality, perhaps some value, maybe taking a little bit off your equity exposure, and consider looking at government bonds, particularly in Australia, where yields have backed up quite a lot. You're getting good yield and also some good downside protection.
That is Isaac Poole there from Oreana Private Wealth, and he wraps up the podcast for this Friday. See you next week. This SBS on the Money podcast is provided for informational purposes only and should not be understood as constituting advice or a recommendation. It is not personal advice and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decisions.